Hi, and welcome to Dukascopy TV. My name is Elizabeth Kiyatsirayanon, and today alongside me is Bruno Estier, independent market analyst. Good morning, Bruno.
Good morning, Elizabeth.
So 2 weeks ago you mentioned that there was a correction in the US equity. How has it been going so far?
It's going on. Basically, we noticed that especially on the index of the VIX, which is the fear index. What we noticed is that we had this support trend line here where it rebounded already 3 weeks ago around 11%, and again last week around 13%, and now it is above 1475. So the fear is kind of increasing. And
what impact did this have on the S&P 500?
So on the S&P 500, which is the large cap index basically, it has been kind of tricky. We are now 3 days in a row relatively sharply down, but we were able just to make in between at 2019 a new high, which was basically a failure to be sustained. And so now we are going most probably to go below the 1978 level, which is the previous low, and towards the 1900 levels, which is the low in August.
Okay, and during this time, what happened to the small caps and the mid caps?
Well, the small cap and mid caps were basically helping reinforce the idea that there was a correction. As we have here on the top part, the small cap and the black line, and we have the relative strength for the small cap on the S&P. Both were making new lows, and even during the small rebound that we had last week, they were not able to reach the previous high. Same thing for the mid cap. And now we are at a point where the small cap have broken their blue trend line and are probably going to test the low of the August levels, which is not yet reached by the mid cap, but should be reached later on. And also that's what we expect on the S&P 500.
Do we have another indication of correction within the US sector?
Yes, we do have indications. For example, typically, let's take the sector of discretionary, which is, a fridge that you buy only once in a time, and that means that are closely related to the cycle. So when things are up, discretionary are up. When things are bad, there are less buying in discretionary. What we noticed here on the top part of the charts is the relative strength of discretionary versus the large cap, the whole index. And since the September, it's going down. The orange line is going down. And now even this level is already below the previous low that we had mid-September, and it's probably going to test the trend line and rejoin the August low. Also, if we take on the contrary a defensive sector, opposite to the offensive sector that was discretionary, staple is a defensive sector, and we notice also during this period on the top part of September that was making higher highs and higher lows, so it was in an uptrend. So people were moving from offensive to defensive, which is quite typical.
So what happened outside of the US?
Outside of the US, we had looked at the emerging market indices, and already 2 weeks ago it was starting to move down with this black big candle. Now it has not only continued to move down, but it has left also a gap, as we can see here. And this is a relatively bearish signal. In addition to that, the momentum, which is the speed at which this whole movement is taking place, is showing a typical bearish divergence, so that calls for further move down, and that's corroborate basically what's happened in the US.
And what is the outlook of Europe?
Europe was trying to do somehow a little bit better during the month of August, as the relative strength, which is here, was moving up versus S&P 500. However, technically there is this big red line, which was a trend support and was broken, and typically in technical analysis it acts as resistance, and therefore along our scenario it's just capping the market, and now also Euro Stoxx is moving down and probably will move below the 20 week moving average towards the August low as well.
Is there no place to hide?
Well, that's a very good question, Elizabeth, because usually during a global correction, there is no place to hide. This time is different, apparently. As we look here at the Nikkei index, we see here on the top part the relative strength of the Nikkei versus the Euro stocks. We see that even during the correction in September, the relative strength is moving up. So that means the Nikkei is not correcting as the other markets. So indeed, it has been making new highs above 16,000, even testing the recent all-time high of 16,320. And what we can say that despite the fact that it's moving in one direction and all the other are moving down, the extent of the correction which could come to the Nikkei is going to be much smaller than in other markets, and that in any case the cloud around 15,000 is going to provide a good support. But we will see in 2 weeks how it goes on.
Thank you for being here, Bruno.
You're welcome.
And thank you for watching. Make sure to keep clicking back on Dukascopy TV for further updates. Goodbye for now.